Welcome back, everyone. You're watching The Final Word on CNN Philippines. Glad you could join us. I'm Rico Hizon. This COVID-19 pandemic combined with lockdowns has turned the economy upside down. And as the country begins lifting strict quarantine measures, the property sector is bracing for the worst. How will it cope amid this ongoing health crisis? Let's find out from Rick Santos, Chairman and CEO of leading property consultant Santos Knight Frank. Rick, thank you so much for joining us. We're expecting the Philippine economy to suffer due to this COVID-19 pandemic and an economic contraction this year. Taking a look at the property sector and breaking it down into subsectors, let's start off with the office sector. How will landlords adjust to this new normal?
Yeah, thanks, Rico. Good to be back. I think, we've just experienced, two black swans, one being health, the other one being economic. And I think you talked about the ICU. So I think what we need to focus on is really CPR here. And that's cash, that's pivot, and that's resilience. With regards to the office sector, a lot of overseas demand for that office sector. And it's been a great sector the last 20 plus years, driven primarily by call centers and BPOs. Which is a lot of overseas companies, and as of late, offshore gaming companies. A lot of those from China. So I think in terms of that sectors globally, U.S. companies, European companies, et cetera, Australian companies will need to basically cut costs. So if they can stay in business, the outsourcing sector should continue to grow. However, if some of those companies overseas are downsizing or actually not making it, then that will be in question. So I think in terms of the offshore gaming companies, that's really driven by a lot of overseas migrant workers as well. So that'll be contingent upon when we can get these airlines flying in and get the migrant workers coming back in. For landlords, all right, I'd advise to look for a win-win scenario. So work with your tenants, basically rental relief, abatements, that kind of stuff. So it's definitely moving from a landlord's market to a tenant's market, Rico.
What about the residential segment? I mean, lease rates are dropping and vacancy levels are increasing. What are their options?
Yeah, the residential as well. It's moving from a seller's market to a buyer's market. So watch closely and see what's going to happen with remittances, because remittances is a key driver of the residential market. Also, the other key factor is the job market. So it's very important, people keep their jobs to keep paying their rent, paying their mortgage, et cetera. So these are two key factors. So once again, if landlords can look to defer payments, work with tenants, et cetera. And the other key factor for landlords is going to be healthy buildings. Like most of us who are running businesses, the health and wellness of staff is key, and also for landlords, the health and wellness of their tenants and their buyers is going to be key. So healthy buildings is going to move from a nice to have to definitely a must have. So, and I think the key in the residential sector is you just see a lot of movement in terms of repricing and whatnot. So if you can get a deal done, get a deal done.
What about the retail sector? Right now, I live across a huge mall. It has been closed for 2 months now. Landlords and tenants have been significantly affected by this mall shutdown. How should they be working together here?
Yeah, the mall sector, and just like the real estate sector, has really been in a cryogenic kind of suspended animation, frozen state, really for the last 60 days. So as we open things up next week in Metro Manila, we'll see some life being going back into that sector. So, but in the retail sector, look very much for behavioral changes as well. Landlords should look actually to work with tenants once again, maybe look to charge turnover rents. Tenants are going to need to be retrofitting their F&B. Things like movie theaters, those kind of businesses are really going to struggle. So will that business model survive? But retail has been extremely hard hit. So that will be a tough sector.
And briefly, Rick, before we let you go, property developers and owners may make all of these adjustments, but who will invest?
Yeah, so I think in terms of investors as well, I mean, you know, some of these sectors are getting hard, whether it's the hospitality sector. Bright spots are things like the industrial sector. So we are seeing a lot of international private equity groups, both equity and debt that have come in, non-bank non-bank financing. So anybody get liquidity. So, and they are looking closely at new sectors like industrial sector, very green shoots come out of that. Data centers as well, which don't always require people. Healthcare and pharmaceuticals will do extremely well. Our alternative asset classes like corporate and personal storage. But once again, healthy buildings, international quality property management is going to be key. So cash, pivot, resilience, a lot of opportunities with overseas tenants and also overseas investors.
Thank you so much for your insights on the Philippine property sector. Rick Santos from Santos Knight Frank.